Hi there, welcome to Kneppy Invest and welcome to another answer and reply video. It is January 11, 2025, current time in Brisbane is 12:06 p.m. on a fairly showery day, not showering at the moment. I wouldn't be surprised to hear a little bit of thunder during the rest of the afternoon. And also, I have gone through all of your 2025 picks and I think I'm going to end it there because I will be doing a video on the 22 companies you have chosen. And there is a reason I have kept it to 22 companies. And I'll talk about that when I record that video. Not sure when I'm going to record it just yet. Probably over the next few days. Probably not on Sunday. I'm busy on the morning of Sunday, the 12th of January. So probably not that day. Maybe Monday or Tuesday. Okay, so let's get into your questions and or comments. And just 1 minute ago, Capital Seth has just got there in time. Could you do a review of HYT, Hyterra, I believe that is, something to do with hydrogen and helium, if I remember correctly. First thing I'm just going to do is I would consider this company to be a story stock. I'm just going to confirm that. And the best way to confirm that is just have a look at the most recent, either Appendix 5B, or any sort of financial statement. And yeah, on the 30th of October, they did release their Appendix 5B. You could also have a look at a conference presentation here on the 17th of October. And they haven't really released anything of note since that Appendix 4C in October. So things are being a little bit quiet for this company, although Fortescue acquires a strategic interest in Hyterra. And that was not price sensitive. I don't know about that. So that is promising, I suppose, but I would still call this company a story stock. I just want to confirm that. Have a look at their most recent Appendix 5B. You go through all the activities. There we go. White hydrogen, a world of opportunity. I didn't even know hydrogen had a color. I had no idea. I thought it was translucent or whatever you want to call it, see-through. Anyway, I'm being stupid, by the way. Fortescue to acquire a strategic 39.8% interest in Hyterra at 3.4 cents per share for a total subscription of 21.9 million. So Fortescue virtually owns this company. I'd say they're the major shareholder. That's without doubt. That's not the thing I really care about. It's just, do they have any revenue or receipts? And I don't think they would, no. So no revenue receipts, which means I would consider this company to be a dog stock. Other than that, that's all I'm going to talk about in this particular video. Hyterra is, a story stock, has no receipts or revenue. There's a lot of risk around story stock. So it all depends on your outlook of this company, your conviction, your risk tolerance. So for example, as you do get older, your risk tolerance becomes lower, and it should become lower and lower. So once you actually do hit retirement, your risk tolerance should be at the point where you want to protect your capital instead of growing your capital. That's more important, protecting your capital over growing your capital. It would be nice to grow your capital at that point. And these type of companies, you just don't know. You could grow your capital significantly, or you could lose all your capital in this company. So I'm not going to really explore their assets, their projects, that sort of thing, because I'm not that much of an expert in that area. So what I do know is no revenue, no receipts, story stock. And the other thing I do know is charts. So let's have a look at the chart just to see if there's been any interest in this company. I have a feeling there has been interest in this company. A lot of interest back in the 29th of August. Was that the announcement where, no, that was before that. What happened on the 29th of August? Let's go back. Why was there sudden interest in this company at that point in time? And, that's when Fortescue did acquire their interest in Hyterra. So that other announcement was for some other reason. So that was that sudden interest in this company because of that particular Fortescue link. Share price on that day rose 67.7%. And in fact, the share price has fallen since then. Share price is or has been an uptrend. It is struggling right now. I'd like to see some bigger volume coming through. That's probably my main gripe right now. But chart-wise, I'm not that keen at this point in time. I'd like to see some further interesting announcements from the company because it has been fairly quiet over the past 3 to 4 months. And that's what I'm going to talk about when it comes to Hyterra. I might do a review of Hyterra, a more expansive review of Hyterra, if they do release something that is really intriguing to me. and I haven't seen that just yet. But if you're like 26 years old and you like this space, you're much more of an investor you're more of an investor or risk-taking investor. This could be the company for you. I should also mention, I remember talking to someone who was fairly young in their 20s, and they were saying, or talking about their portfolio, and they just had banks in there. I was like, oh, I just wish I was some sort of financial advisor, because I'd say, why would you be investing in banks when you're 20 years old or 25 years old? Go for the growth companies. Anyway, that's just me. Maybe. TS3MD, Austrac fine will be reduced. So we're talking about Star Entertainment Group. So that he's saying, or she's saying, the fine will be reduced seeing the current situation. I guess this situation is created to minimise a fine to 150 million and to get the license back by mid-2025. Time will tell. Someone I know bought big chunk on a Friday. Chart does not look good. Share price is down a fair bit. We have been getting downgrades from brokers. It doesn't look that promising for Star Entertainment Group, but there is a definite scenario where everything turns out fine for this company. And if everything does turn out fine for this company, it is cheap right now. I have seen this in the past where a company is on the precipice of going bankrupt and things turned out okay. I'm pretty sure Fortescue was at that point many, many years ago. St. Barbara was at that point maybe 2016. In fact, let's have a look at the St. Barbara chart. This was fresh in my mind. Because I still remember this. I'm pretty sure it was 2016 because that was the bottom of the market, I think. 2016? Oh, actually, it was 2015. Close. St. Barbara share price got down to, and I'm pretty sure there were concerns about the future of St. Barbara at this point in time. And the share price low in St. Barbara was down to 3 cents. And everything went okay for the company. Share price went from 3 cents, and the next high was $1.60 in 2016. So just over a year's time, the share price went from 3 cents to $1.60. So in these sort of situations, because it is high risk, you do expect a high reward if the potential risk plays out not the way the rest of the market thinks it's going to happen. So I would say the rest of the market right now, I think the future is quite short for Star Entertainment Group. And if it doesn't go that way, then the potential upside is quite large. So that's why I've decided just to hold my shares. It's a small stake, no reason to sell, because if it does go up a lot, then I could make a little bit of money out of it. Anyway, so that's St. Barbara. In fact, if you have a look at the weekly chart for St. Barbara, the next high, not the next high, but for some reason I thought the share price got to nearly $5. No, share price did get to 225 in 2000. Oh, that's okay. That's way back. So yeah, so share price did get to 225 in 2018. So over a 2-year period, the share price went from 3 cents to 225. So we are talking about almost a 100 bagger. So that could happen. It could happen with Star. Probably won't, but it could. Okay, so a Damian LF2KI. These videos are silly. Every single day is overkill. The fact you're saying RAD, Radio Farm Theranostics, I've spelled the name Theranostics wrong, is stock of the day. Well, then again, Damian spelled of wrong. Of the day when its known dog sums it up. Well, no, it doesn't sum it up. I'm going to give this a thumbs down. I don't usually give thumbs downs to comments, but this deserves a thumbs down. First of all, why would you be commenting on a video that you have no interest in, or a company you have no interest in? Yeah, did you watch the video? And if you did watch the video, why would you be watching a video that you think is a dog stock? Now, I actually do agree with you. I think Radio Farm Theranostics is a dog stock, but that's just me. There could be other people out there who think it's not. Plus, the share price went up 50% because there was a 150% premium placement, which is really unusual. So that's why it was the stock of the day, because it was something unusual on a relatively quiet day. So my thought is, why be watching? You have a choice. You're an adult. You have a choice. You can decide not to watch videos or watch them. Or you can decide not to comment on videos or comment. And to be honest with you, your comment is not going to stop me from doing these videos. Not at all. So thumbs down for Damian. 2 thumbs down. BillWalton also bought some shares of Star Entertainment Group at 11 cents. Let's hope this turns around. I hope it turns around for you as well. I need a 10 bagger to make back all my losses. Ooh, eek. Eek. Deserves a thumbs up. You will. There is a possibility. I'm telling you, there is a possibility Star Entertainment Group will be a 10 bagger from here. Now, I'm not sure what that possibility is or the probability of that. It could be 20%, it could be 30%, it could be 50%, it could be 70%. If it is 70%, then it's a no-brainer at these prices. But if it's 10%, then you should be thinking it's probably not worth it. So there's a lot of uncertainty. And the other thing is market hates uncertainty, and there's definitely a lot of that when it comes to Star Entertainment Group, particularly around the viability of this company. Mr. Vet Powell says, Genetic Signatures, which is a company I've been following for a while, and I'm just waiting for this company to become profitable and operating cash flow, free cash flow positive. Haven't quite got there just yet. On occasion, they have looked like they were getting towards that point, and this company was very beneficial, or COVID-19 was very beneficial for this company. But of course, just like other COVID-19 benefiting companies, things went pretty bad after the vaccine was announced and everyone got their vaccines and all that sort of jazz. Anyway, so Genetic Signatures had placement with premium after FDA approval. After 6 months later, share price is lower and no more news. I can't remember when they had FDA approval, so just let's have a look at the chart for Genetic Signatures, and you will see the share price was up a lot. Here we go. For some reason, I did a video on this company, and I put pre-COVID and post-COVID. And pre-COVID, in fact, the share price was on a nice little tear. COVID hit, and this is one of the companies that benefited from COVID. You can see that just with the chart. Share price went to a high of 288. I would say that high will be in October. Oh, it's July. So a little bit before what I think. So the vaccine was announced sometime in October, if I remember correctly, and the share price was already a downtrend at that point, and the share price has been dropping ever since then. I probably will say, just based off the weekly chart, share price still in a downtrend based off the weekly chart. But if you do look at the daily chart, I would say the downtrend has come to an end. And I wouldn't say the chart's looking really good right now, but I definitely will be keeping maybe not a close eye on this, but whenever this company does release any sort of announcement, price-sensitive announcement, I will be looking at it. And I'll be waiting with bated breath for a really good financial report, or maybe even announcement to say they are going to be profitable and operating cash flow, free cash flow positive. Could be any of that. So no, thank you for that, Vet Powell. And by the way, this comment was in relation to two companies yesterday on the 10th of January had a placement at a premium, which is really rare. Hence why Radiopharm Theranostics was the stock of the day, and Structural Monitoring Systems was the second stock of the day. And it doesn't happen all that often. And here's another case. Genetic Signatures had a placement with a premium. So someone's talking about Computershare, my financial year 22 and interest rates video on that company. Valuable, important information. Thank you. I would not be surprised to see Computershare chart in a bit of an uptrend right now because of rising or the potential of rising interest rates. And there you go. So this company benefits from higher interest rates because they have a lot of cash on hand or something. I forget how this company exactly works, but they do have a lot of cash, and so they benefit from high interest rates because they get a little bit of a return on that cash they do have on hand, sort of like insurance companies. Anyway, I think that's how it works. I could be wrong. If I am wrong, just let me know. So you'll see a bit of a correlation between interest rates and Computershare share price. And we have seen share price really take off since November, since Trump got in. Is there a relationship between Trump getting in and this company that benefits from high interest rates? And look at that, share price has gone on the tear. So the market is saying, the market in fact is screaming, the bond market is screaming, Computershare share price is screaming right now that inflation will be a problem, and there's a potential that interest rates will rise in the United States or even here. So maybe it's not the end of inflation. And if Trump gets his, well, he not gets his way, but if Trump's policies, if he follows through with his policies, yeah, there will be probably more inflation, and there's a greater chance that America will go into recession. And if he doesn't follow through with his policies, well, he's not telling the truth. But then again, how many politicians have lied to the public before? I think every single one of them have. So anyway, so thank you for that. NT Land Sci Fandle. Bill 1 or I 4F, thanks for the updates. Did you mention you were a holder of Novo Nordisk? Yes, I am. Can you please provide your thoughts on the chart? Oversold and has had a couple of good days. Just noise or a potential reversal. In fact, I believe Novo Nordisk is probably my worst performer. I think it's by far my worst performer. I think it might be the only company I do own that's down in my American portfolio. Not my American portfolio, my international portfolio. Could be the only company down. I think this is listed on Denmark. I could be wrong. Anyway, so Novo Nord. I'm pretty sure this is also listed on the NASDAQ, but I didn't buy shares of this on the NASDAQ. Yeah, New York Stock Exchange. I actually bought shares on the. That does look like Denmark. Yeah, I bought this Novo B. Does look like Denmark. Anyway. Oh, they had a big down day. Just shows you. So Thursday, the American markets were closed. I had no idea they were closed. Whenever I wake up in the morning, I have a look at the how the market has performed over there, and I saw it was up slightly. So it's up slightly. No idea the market was closed until that afternoon and evening, and it just shows you that I don't really follow the movements of share prices of the companies I own over there, because I had no idea Novo Nordisk is down a fair bit. That would have been on the release of some sort of financial results, I would assume. So that's interesting. This is more of a long-term Novo Nordisk. I'm just going to have a look at the New York Stock Exchange. Yeah, so the share price there did drop a lot. Whatever you said, Bill, definitely I'd say oversold, just noise or potential reversal. I would not say there's any potential reversal right here just yet. Definitely not just yet. This is just a bit of noise. Maybe oversold. Actually, I'd say it's not oversold because the share price has gone sideways from the big down day. That's when it would have been oversold. We can confirm that right now. RSI. It could be close to being oversold, but yeah, it's gone back from being oversold because share price really hasn't dropped much over the last few weeks since the big drop. So it definitely was oversold on that day, and we didn't see much of a bounce, which is concerning. So I don't think there's not a reversal. There's no evidence this is a reversal. In fact, the chart looks really negative right now. But I do consider this to be a high quality company. So if the share price actually falls a lot further from here, now depending on what price I'm willing to pay, if the share price does fall a lot from here, I will be adding to my position. There is some belief that if you just look at the 200-day moving average for any high quality company, and if the share price falls below that 200 moving average, then that's a good opportunity to buy. I've been testing this, looking at it, and even with Novo Nordisk, good time to buy was back in September 2022 when the share price did fall below that, and right now it is below it, by the way. And before that, during COVID-19, it fell below, and before that, I never knew this company existed. So I'll be testing that. Whenever a high quality company falls below its 200-day moving average, could be a good time to buy. But the question is the company a high quality company? For me, Novo Nordisk is a high quality company. And there's reasons behind that, which I won't get into this video. But because the whole question was about the chart, I'd say it is not oversold anymore. Share price has really done nothing over the last 2 weeks since that big down day. No significant bounce. And I just think this 1 day or 2 day rise is just a bit of noise. Another great comment from Happynow. I'm assuming it's great because I haven't read it. Another good video. I'm definitely feeling and seeing the volume precedes action you keep talking about, as mentioned in your wrap-up video for today. I just read that a few times. So a lot of reading. I do a lot of reading. And I read that first time many years ago. And I then reread it in another book maybe a year ago. And ever since that second time I saw it on Reddit, I've just been noticing volume. And that's why I'm starting to look at volume a little bit more often. So, yeah, anyway. You keep talking about, as mentioned in your wrap-up video, I just got a message. That's why I just sort of diverted my eyes. Anyway. So as mentioned in your wrap-up video today, I still like the confidence and commitment to bite the bullet, but we always make spelling mistakes. To bite the bullet, as you noticed, Radio Farm Theranostics. I've left a no there just after the R. To bit the bullet, to buy in, after missing a bit of a rise, only for it to do the same thing the next day and the day after. I got to keep reminding myself to not be disappointed in missing the bottom, so to speak, and to just jump on the train ride. The only thing I'll say is there's a lot of opportunities on the market, so just because you might miss an opportunity, you shouldn't fret upon it. There's a lot of opportunities on the market. And the big question is when to take a position. So that is a big question. And I have missed plenty of opportunities. I'm still thinking about Car Group. There was a no-brainer. This is my no-brainer buy, and I didn't take a position. Car Group, it was right here. I actually put breakout there. On this particular day, they released results on the 14th of August, 2023. It was the most obvious breakout. It was exactly what I'm looking for. And since then, the share price, has gone up a fair bit. And I still remember that day thinking, this is a good buying possibility. Share price the next day went up, and I just didn't buy it. So the most important thing is don't fret. Don't dwell. Don't dwell on your decisions. If you make a mistake, fix it. And well, that's not absolutely true, because if your mistake is not buying in, doesn't mean you have to buy in. Just learn for the future. Anyway, Roger Dawn, hey Kneppy, have you ever had a look at AEI? I don't know anything about the company, but it is some sort of environmental company. And the reason I know that, it's in my environmental watch list. I do have an environmental watch list. It's actually called it's actually called Agriculture Environment, and it's in that watch list. And I don't know why I combine those two. They are sort of separate. I suppose they're sort of linked. And it is in that watch list. Other than that, I don't know anything about the company. Anyway, so AEI, Aeris, this is interesting. So there's Aeris Environmental, and there's also Aeris with 2 E's. This has something to do with early warning systems or something like that. I do know that one, but Aeris Environmental, I know nothing about this company. Whenever I don't know anything about the company, the first thing I do is have a look at the most recent Pennies 4C, which was released on the 29th of October. Since then, they have not released anything. Is this company generating any cash flow or any receipts? I think they are generating receipts, if I remember correctly. I don't think they are cash flow positive. So receipts, 839,000 in the last quarter, and operating cash flow negative 713,000, and that's with income tax refund. And to be honest with you, that's all I do. That's all I do with this company. I just move on to the next one. What do they do? That's the most important thing. Focus on growing an ecosystem of products in the smart building market, solving the increasing demand for energy efficiency and carbon neutrality solutions. Aeris ecosystem of products allows customers to measure, verify, and act on their carbon footprint via a range of products, including hardware, software, and consumables. That sounds interesting, but just because something sounds interesting, in my opinion, doesn't mean it's an automatic investment. How are they succeeding with their business model? And the other thing, most important thing, is how do their customers like their product? And how much more expansion can they expect? What is their total addressable market? That sort of thing. And the first really good signs of this company really growing would be starting to see good growth in receipts. At this point in time, only 139,000, so that's fairly low. So I'm not sure if I would have this company on my watch list just yet. And what about the chart? Is there any interest in the market around this company just yet? And there is a bit of interest in this company right now. So share price actually moved into an uptrend back in December of 2023. Share price at that point, 3 cents. Now it's up to 8.4. Market cap is $20.6 million. So it's a fairly small company. And the other thing is, look at the volume, fairly low volume. So that doesn't fill me with any nice fuzzy feelings. And small cap Envirotech chart looks a bit promising. Yes. HitIQ has been going for a little jog since we looked at it in October too. Let's have a look at HitIQ. Isn't this to do with head injuries or something? HitIQ. Oh, yes. Look at that. Share price has just gone little bananas. Has gone from about 2 cents up to 4.8. I think this is another company where the chart looks really good. And again, there's a lot of opportunities out there. I could actually give you maybe 100 companies that look really interesting in terms of the chart. And I think it's just filtering through those. And one of the things I do filter is I tend I'm more likely to trade profitable companies that are a little bit bigger as well. I'm less likely to trade smaller companies. I do trade smaller companies, but I'm always nervous when I'm trading smaller companies, particularly if they're not profitable. So I do tend to sway towards profitable companies, bigger companies, that sort of thing. That's just me. Just the way I like it. And then the most recent appendix 4C for HIQ, high dick or hit IQ. Is it HitIQ? And yeah, I do this for every single company releases their appendix 4C or 5B. I go have a look, very quick look at this. And if I see something interesting, I will take a close look at this company or that company. So this company has receipts, fairly low receipts at 389,000, operating cash flow negative. Does not mean that this company will keep on burning through cash. But if I do see the company moving towards an inflection point, that's when I do become a little bit more interested in that company. And I'll probably say this company is not there just yet, the company itself. But the chart does look interesting. And notice massive volume coming in just as the share price starting to break out. One-day spike in volume. Thank you for that, Roggy. Okay, another comment from Happynow. Another very enjoyable video for today. Couldn't wait to see the trading talk on Mesoblast, and happy got something out of my visit to the Star in Sydney last month. Pretty bleak. Sorry for not staying in the city, but it was a city one. Okay. I'm just wondering, one thing I'm wondering about Star Entertainment Group is their new casino in Brisbane. How is that performing? So I would love to see a breakdown in the performance of their different casinos in their February results. I'm not sure they will give it, but that's what I'm waiting for. They're wanting me to do a shift tonight, I think. Okay. Not sure I'll say yes, but maybe. Okay, so Lucas L6833, I agree with your opinion. Zip dropped from 7 to 20 cents and now it's $3. I personally think there's opportunity in Star Entertainment Group. Oh, here's another case. Zip dropped from $7 to 20 cents. These are actually the sort of situations I am looking at. Companies that have share price has dropped a lot because sentiment has been destroyed, and there is potential that these companies have turned things around. I'm not absolutely convinced that Zip has turned things around, but it does seem like they're on the way. In fact, the share price was more than $7. I'm pretty sure the share price of Zip was like $13 at one point. I'm pretty sure it was $13. Let's have a look. Oh, we have to auto fit. It was $14. It was $14. And the low, well, was like 20 cents. Yeah, so does not mean that share price will get back up to those levels, because I think the market was being a little bit over optimistic with the Zip at that point. So good point about Zip. And yeah, I do think, I'll just reiterate this, I do think there is a possibility, not sure what that is, what percentage that is, there is a possibility that Star Entertainment Group will come out of this. And if it does come out of this, it would be a bargain at these prices. And your Frenchman says, sudden or surprise might be the spontaneous alternative you're looking for. Oh, I can't remember what I was talking about then, but you're probably right. 10% ownership limit with Star. Thank you, Rick Thelian. Dan Bag says, let's have a guessing competition for Mesoblast capital raise amount. My guess is 250. Okay, let's do this. Okay, what they'll do is have a look at the VWAP for the last, I don't know how many days, probably VWAP, and they'll do a discount at that VWAP. I'll say 10%. I'm going to say, like 10% at 28 cents. So 252. I'm going to go a little bit higher. I'm going to go 260. No, I'm going to go 260. Yeah, I'm going to go, no, it's 281. I'm going to go 10% from, so my 282 was sort of like an average share price we've seen over the past 2 weeks. 10% from 280 would be about 250. I am going to go to 55. Craig Luby, structural monitoring systems, expecting FAA approval third quarter 2025 and revenue from Delta. I'm going to have to believe you, Craig Luby. I don't know structural monitoring systems all that well, but I do know when I did have money in them about 10 years ago, they were expecting FAA approval not within, well, definitely within 10 years. So it's been a long road for structural monitoring systems. I'm not sure if they've got new products because they were monitoring cracks in planes, that sort of thing. I forget what it was called, but that's the main thing they were looking at. And I'm pretty sure they already had a relationship with Delta back then as well, but I could be mistaken. But yeah, if they do get FAA approval in third quarter, and revenue, I will become more interested in structural monitoring systems. You're welcome. And Sensei says he or she tries to avoid hot hopper, used to go on there a long way ago when new to investing. Yeah, I do still go on there, but it's on a limited basis. And I usually stay on there for maybe 10 seconds just to see if there is something interesting I'm looking for. But most of the time, I stay off there. Anmar says, would love to know your thoughts on the gold ETF global, physical gold, particularly during this time if financial uncertainty. Would love to know your thoughts on the gold ETF, particularly during this time of financial uncertainty. Well, I think the first thing is, what's your thoughts on gold itself? So what are my thoughts on gold itself? I have no idea. Let's have a look at the gold chart. So the first thing you notice in the gold chart, it looks pretty good. So if anything, I'd be bullish on gold just because the chart looks good. The chart looks good. There's no two ways around. The chart looks good. You could say there's a bit of a, what's this thing called again? I forget what it was called. Some sort of triangle, and it's broken above that triangle on Friday. That could be a breakout for gold. Apart from that, I don't usually invest in ETFs. I'm trying to think, would I invest in a commodity ETF? This is physical gold ETF, by the way. Would I put my money in physical gold? No. No, I would not. That's just me. I probably would not. Yeah, that's just me. I'm not a big fan of ETFs. Not the biggest fan of physical gold. I can understand why people would want to put their money into physical gold just to protect the value of their, I suppose, their assets. So it's all about, so I talk about, there's two things we should be doing when we're investing. It's protecting your capital and growing your capital. So physical gold you don't really grow your capital with physical gold. You protect your capital. Now, that's the main reason to hold physical gold, is just to protect your capital. Can't really grow your capital through physical gold. So I think it comes back to, how do you want to protect your capital? And if you do or really want to protect your capital, that could be a way to go. If I was a retiree, I wouldn't put my money in physical gold. I need some income, and that's one of the problems with physical gold. You don't get any income. So it all comes back to, what do you think is going to happen in the future? And how do you want to protect your capital if that's your main goal? But I have no fans, or I'm not a fan of ETFs. What is the gold ETF? It's just gold ETF. I have no idea what the gold ETF is. Is it just called gold? Did you actually mention it on this? No. And for some reason, TradingView has just gone silly. Maybe it is just called gold. And you just notice, yeah, this does track physical, not the physical gold, it does track gold. It's a little bit different though. It's a little bit more bullish than gold itself. I like this chart. It's a nice chart. In fact, I would trade that. You could do that. You could just trade it. Jon Frenjamin says, I've learned so much watching your commentators or commentaries. Kneppy, you've been invaluable. You're welcome. You are welcome. Glad to hear it. Okay, Now we're going back 2 days ago. I thought I answered this one. I could be wrong. Oh, no, I haven't not answered this one. With your video of the stock crash, how much emphasis, if any, do you put in diversification when you make your buy decisions? 0. For example, say every stock you pick somehow ends up in 1 or 2 classifications. Do you think again on the trade, or do you go, no care, it ticks my boxes and I'll trade yet another stock in the same classification? Yes, that's how I do it. I don't care about having too many companies in a sector if I'm trading. Even if in my high quality portfolio, I don't really care. It's just high quality companies. So for me, I do know some experts say you need to have some defensive positions. Why do you? Or you need to have some gold positions or some commodities. Why? You don't. It's not absolutely true. You don't need a position in each sector or something like that. So I never think about diversification in terms of having different sectors or different weights in different sectors. Anyway, so yeah, it's probably all I'm going to say. Thank you, Happynow. Oh, that's right. I've already gone through this. So your Frenchman did all the picks, and I've done this already. Oh, great work, Frenchman. JustJames, I'm pretty sure I talked about this. No, I didn't. I did talk about Nueren, but I did not talk about how Nueren was up 4% a few days ago. So Nueren, it started to look really ugly for Nueren Pharmaceuticals. Technically, not company, technically, it looks pretty ugly. Share price on the 7th of January just fell below $12. Now, the thing you'll notice since then, share price has been oscillating above and below $12. And that's very normal when there is an either support or resistance level. So you're getting people buying at $12, people selling at $12. So this is a support level. The share price right now is just below that level. Doesn't mean it's a break just yet, but if we start to see the share price fall below and continue to fall below $12, that will be negative. Sort of like step one. I think we have seen step one maybe break below an important level. Why is TradingView just going? Just take your time, TradingView. No rush. So step one has the very important level for step one was about $1.25. We have seen the share price really bounce off that level a few times in the past year or so, and it tried to bounce off again, but the bounce was really weak. And then about a week ago, it fell through at $1.25, and it's remained below $1.25 the last few days. So that is a negative sign. We haven't seen any buying coming in. So a potential negative break for step one, and I am thinking of selling the rest of my holding in this company just because of the chart. So same sort of thing with Nueren. It could go either way. I don't know. Sensei is already counting data days of 2025. Oh yeah, your Frenchman. I'm going to do a standalone video on this. I'd love to hear even a brief Kneppy lesson surrounding what offensive stocks are. So definitely doing a video or standalone video on that. I have yet to think about recording that, but I will sometime today. No, not today, this week, next week. JustJamesDean said he saw a house today. I see houses every single day. You don't see me talking about it. Anyway, same length as row, terrace houses and 3 stories tall, rough guess, 3,500 square meters floor space. We are making pennies here, and this bloke spent millions like pocket change. I am dying of envy. I need a bit of context there, JustJamesDean. Who's this bloke who spent millions? You mean who created all these terrace houses? Anyway. Okay, Happynow also talking about demerits, potential. Yes, thank you, Happynow. Okay, Happynow just says, in today's video, when you mention podcasts, do you find that they could say any stock and because of sheer watchers, viewers, or if you can influence the stock will rise, even if it's short-lived in the short term, leading into that, say when you release the most popular stock videos in the near future, that these, especially the ones where you mention has 3 or 4 votes or mentions, will immediately rise. I hope my excessive ice cream consumption hasn't made this or me sound too randomly silly tonight. No, there's no such thing as excessive ice cream consumption. Well, that's not true. Of course there is. Ken Can I influence the share price? I'd say no. Can podcasts influence the share price? I'm not sure about that, but definitely whenever a fundy or a broker or a stock picking service, when they do recommend a company, that will influence the share price. And I do remember a company called, what's it called? It's gone, it's been taken over now. Damstra. So about 3 years ago, maybe it was 4 years ago now, Damstra was recommended by Motley Fool. I didn't understand why the share price had simply gone berserk on one day, and then I found out they were recommended by Damstra. Damstra was recommended by Motley Fool, one of their services. Must have been one of their small cap services or something like that. I don't know. And that was a high. Then the share price went from something $3 or so all the way down to below 10 cents. So that was one of the worst picks I've ever seen. But a lot of people bought in on that day just because Motley Fool had recommended that company. And I still don't understand why people do that. But people just don't want to do the hard work. They don't want to do the research themselves. They want to give money to other people to do the research. And it's your own money. Look after your own money. Don't let other people look after your own money. That's my thoughts. It's my money. I'm going to do everything possible to look after my own money for myself. It's way more interesting as well. It's just so much better to do it yourself. Vin Hilly. Oh, okay. I noticed lately on your charts that you placed the green and red shaded Bollinger Bands with the, it's not Bollinger Bands, moving averages, with the 2 lines representing moving average. What are these? And is that what you now rely on when reading charts? What I've done is I just became a little bit, I've still got those here they are. I will use them. But what I decided is I just wanted 2 moving averages, which is a 25 and 100-day moving average. So 25 would be the black one, 100-day moving average is the blue one. And I just wanted a really quick, easy buy-sell signal. So using the other one, don't really get really easy buy-sell signals. It's a little bit more complicated. So all I wanted was really easy ones, and I do like what I've got here. I do like the 125-day. I've ummed and ahed about it. I was thinking 50 and 100-day, maybe 50 and 200, that sort of thing, but I've just gravitated towards 25 and 100. I do know some, I forget his name, he uses 50 and 100, and he's been highly successful, but I just think that's a little bit, yeah. I still prefer 25 and 100, but I just like it. That's for me. By the way, it's me. Everything I do is just for, it's for me. It's for my own, what's a good word? It's to make my life a little bit easier, but I think everyone should find what works best for them. That's the main goal I have, or one main goals I have in this channel is to empower yourself, to make decisions yourself, using the tools yourself, the tools that work for you. So if you like Bollinger Bands, use Bollinger Bands if it works for you. So what I'm trying to do is just simplify things, and this is as simple I think I can get. Rick Fillion, Monday, IFL share increase, second bid takeover. Yep, you are right. IFL, Insignia, had a second takeover bid. There was also rumours of another takeover bid. That's why the share price rose again. So a couple of rumours. Oh, it's been 2 weeks in a row, 3 weeks in a row, where we've had some takeover bids, and we have more rumours of takeover bids. That's why the share price has just gone a little bit nuts for Insignia. And we had a few people pick Insignia, and I understand why they picked it. Because if you go to the start of 2025, the share price is already up a fair bit. Probably not as much as the Merrick's, however. Anyway, so thank you for that, Rick Fillion. Let's do algebra. You put in 10,000 stock. Okay, I'm pretty good at algebra. You put in 10,000 and the stock 3x's, so it's now worth 30,000. You add another 20,000. Total holding is 50,000. Allow is 30,000. Give yourself buffer. You stop loss at 30,000. If price pulls back, you close out at 30. You conserve your original capital unless the stock cap down massively over 40%. So JustJamesDean is going through different ways of investing for him. And if he finds this works for him, I'd say go for it. If it works for you, go for it. He's talking about adding to winning positions. And I actually will say this, and I'm pretty sure a lot of experts would agree with me, adding to a winning position is really hard for investors. Really, really hard. Yeah, so they're more likely to hold on to losing positions, which is actually the wrong thing to do. The right thing to do is add to your winning positions. And I'm pretty sure the Motley Fool guy in America, what's his name? Motley Fool guy in America. Motley Fool America. What's his name? David? Is it David? Guy. Motley Fool America guy. Tom Garner. David. I don't know. Or maybe it's David Garner. I think it's David Garner for some reason. Maybe it's Tom Garner. No, one of them. Anyway, so one of them, or maybe both, that's what they would do. They would then take positions in companies and they will let their winners run. But not only would they let their winners run, they'll add to their winners, and their losers, they wouldn't sell the losers, they'll just let it go. Because if you think about it, if the share price of your losers keeps on going down, it's only so far it can go down. But if you ride your winners and add to your winners, you could see percentage rises or increases of 200%, 500%, 1,000%, 10,000%. I was listening to a podcast this morning, and this guy has had two 10,000% winners over the past 20 odd years. And I was thinking, oh, I should subscribe to their site. I think it's called Simply Wall Street or something like that. So he's just talking about, he's had two 10,000 plus winners in the last 20 or 30 years. And that's how you do become successful. Have these winners who are up 10,000%, because what's the maximum you can lose in a position? 100%. That's it. What's the maximum you can gain in a position? It's actually infinite. It's 1 billion%. It's 1 trillion%. It's 1 quadzillion%. Yeah, so anyway. The key is to find what works for you. And JustJamesDean seems to be headed towards that sort of investing philosophy where he adds to his winners. And I've got to give that 2 thumbs up. He's also keeping an eye on new virus burning through China. Hope it's not COVID 2.0. Yeah, whatever. I reckon we have COVID, who cares factor. I think none of us really care about COVID anymore. In fact, this is the time for nature to really provide us with another pandemic, because most people just don't care anymore. I'm not sure the same can be said for governments, however. Hi, Kneppy Squawk. Do you take notice of the broker price targets? This is an easy question or answer. Yeah, question to answer. No, absolutely no. I don't care about broker price targets. In fact, I just don't understand why other investors care about broker price targets. I think they're ridiculous. And what you also see is, or notice, is if a broker has a share price, say there's a company called XYZ, and they have a recommendation or a price target of $5, and the share price of XYZ rises to $10, they're going to rise their price target because they look priced quite silly. If they have a price target of $5 and the share price is $10, so they automatically raise the price target. And the same can be said if the share price starts dropping. They look pretty silly if their price target is $10 and the share price drops to $5, so they will naturally actually decrease their price target. So I just don't take notice of any broker's price targets. In saying that, whenever a broker does change their recommendation or downgrade or upgrade a recommendation, the share price can move. We just saw that with Lavisa the other day. Rick Thelian, heads up, bonds are being released 3-year already, 10-year tonight, 30-year the following, putting dividend yields on pressure and stick prices pressure. Not sure what stick prices are. I prefer branch prices, to be honest, and tree prices. By the way, I did hear that bonds, 30-year bonds, maybe it was 20-year bonds, have gone above 5%. Oh, they did. Well, the 30-year bonds went above, or got to 5%, went to 5.005%. Yeah, the last time it was this high was actually back near the peak back in October 2023. So the bond market right now is really, really intriguing. The bond market is telling us what's going to happen with interest rates, or maybe not interest rates, definitely inflation within the next year or so because of Trump's presidency. And he is an inflationary president. Well, his policies are quite inflationary. And the bond market is telling us that. You could actually disagree with me saying, I don't believe his policies are inflationary, but the bond market is telling they are. That's what the bond market is saying. They're inflationary. And anyway, back to your comments. Kirat Singh, great day for Demerics. Are you looking to add more if you're still holding? Also, TPW on a 6-month high, Temple of Webster, and trend seems to be shifting on Playside. News coming. Findi closed below $4 today. Thoughts on today's price action? So are you looking to add more if you're still holding? I am holding, and will I be willing to hold? No, probably not. What I'll probably do is just continue to trade it and just see how it goes. Temple of Webster, I am trading Temple of Webster as well. I'm a little bit, I'm two-minded about this one. The chart doesn't look half bad. I did buy on the release of the results in August, by the way, so that was me buying on the back of financial results. And every time I look at the valuation of this company, I just go, it's really overvalued. Maybe not overvalued, but there is a really high valuation attached to this company. So I thought, okay, I'll buy it, but anyway, share price is in an uptrend. Did get to a long-term high, yeah, and it's pulled back a little bit, which is okay. Normal for any company who is in an uptrend. And I did mention Findi the other day. Share price of Findi bounced on Friday session. I reckon it was really oversold, so the bounce was coming. Didn't expect 11.43% bounce. And Playside Studios chart is starting to look, maybe. I wouldn't be there just yet for Playside Studios. They did release something negative in October, would have been a quarterly report. The share price did have a nice day on the 7th of January, up 9.64%, but the share price has pulled back. So I'm not there with the chart just yet for Playside. It needs a little bit more work for me to get a little bit more excited. Ooh, what happened there? Map made a free roof to free carry on 10 baggers. CSL, ProMedicus, ResMed, Zero, Orabanda, Imogen, BrainChip, PPK, Technology One, XRF Scientific, and Weebit. Nano, it gives me cash for new shares and makes the volatility acceptable. Again, this is another investing philosophy, and I actually quite like this investing philosophy. So you have a 10-bagger, and you just free carry. So if you put $1,000 in, it's 10 bags, you've got $10,000. You take out your original $1,000, you still got money in that company, but you can actually deploy that $1,000 into the next company that has a potential to become a 10-bagger. I have done this sort of thing in the past, but I don't say it does 10 bag. I don't actually take out the initial capital. I actually take out a little bit more. So I'll take out $2,000 instead of $1,000, just to give me a little bit extra because, yeah, it's just a little bit extra. But I don't mind this sort of investing strategy. I think it's pretty good. The only thing is you just need those 10 baggers. So patience does work in this case. Ryan Mott says the Bear ETF. Pretty good TV show, by the way. Oh, that's a recommendation. That's a stock pick for 2025. Unfortunately, there's no one else who picked the Bear, so that won't make it. What is the Bear ETF? There is one. What is it? What is it? What is it called? Oh, it's just Bear. I thought it was something else. It's just Bear. Now, if you just look at the chart, the first thing is, nah, not for me. By the way, if you look at the weekly chart for this, if you're a bear, a perma bear, like there are some people out there, this is like the worst looking chart in history. This is the worst looking chart in history from 2013 or 2012 all the way through now. The price of the Bear ETF has gone from $25 to $7.71. It's a capital destroying ETF. And that should be expected because what is true about equity markets? They go up in time. So if that is true for equity markets, the Bear ETF must go down through time. So this is one ETF where you definitely don't want to own for the long term. And timing matters. Matters. So JustJamesDean, in fact, he's talking about new strategy, consider adding to a winner. I think I've already gone through that. Cuts both ways, bigger winner and loss. And there's nothing you can argue against this, adding two winners. I've already talked about it. So there you go. You're welcome at TT. I am going to end it there. Sorry, Alex W08. I'm almost at 1 hour long, and I do need to finish this video. I thought I'd get through a week's worth of comments. So the amount of comments on my channel is starting to increase. So I'm having harder and harder times getting through all your comments. So there is some way I'm going to have to get through this. Maybe I have to pick and choose which comments to talk about. Maybe I can just focus on standalone videos where I just focus on really good questions. That sort of thing. Or maybe I'll just pick out companies. So for instance, Sensei says thoughts on cardiacs. Maybe I just have a quick look at that. Anyway, so that's something I'm going to have to think about because it does seem like there are more and more comments on my channel, which means it's hard for me to get through unless I do a 5-hour video. Anyway, that's all I have for this video. If you have any questions, any thoughts, leave those in the comment section of this video. Otherwise, I'm not a financial advisor. If you need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.